Well, let's get straight to that then. You have Macrotech developers that reported a very, very good set of numbers. The stock, in fact, was trading higher. It's come off the high point of the day. But FY24 was an absolute stunner for them. What's the outlook with regard to FY25? We have Mr. Abhishek Lodha, the MD and CEO of Macrotech Developers, who joins us on the show. Hi, Abhishek. Good morning and good to see you in. Well, you're looking at a pre-sales turnover of closer around 17,500 crores for the next fiscal. That's FY25. Break it up for us. What is the launch pipeline looking like? You had price increases in the past year of close to around 5%. So how much of this growth will come in because of price increases? And what should the volume number look like in FY25 in comparison to FY24?
Good morning. Very good to be with you. We closed FY24 in line with our projection for 20% growth and grew a little over 20% to pre-sales of 14,500 crores. And our embedded EBITDA margins were at about 31%. We as a company are striving to ensure that we have predictable growth and we have profitable growth. And both those parameters are very important for us. For fiscal 25, our guidance is for another approximately 20% growth in pre-sales, bringing us to about 17,500 crores of pre-sales and an embedded EBITDA margin of about 31%. In terms of the mix of the pre-sales and pre-sales growth, we're looking at price growth to continue to remain below wage growth because that's consistently being our effort to make sure that affordability keeps getting better and more Indian families can afford to buy a high quality home. So we're looking at about 5 to 6% price growth for the coming fiscal and the balance 15% coming from volume growth. The volume growth can again be broken down into two parts. Volume growth from existing locations, which will be somewhere around 4 to 5%, and the balance 10% will come from volume growth from new locations.
Okay. I want to understand, since you said new locations, Abhishek, I'm going to take that forward, right? While most of the Bangalore-based players are rushing to come into the Mumbai markets, here you are taking your projects to the Bangalore area. I mean, 2 pilot projects have been kicked off in Bengaluru. So I want to ask you, how has the response been? Primarily because, there is a lot of talk about oversupply in the Bangalore markets and the fact that price hikes have not come along for a while. How are you looking to sort of navigate that space, and what is the kind of launches that you're looking at over the next 1 to 2 years?
Sonia, hi. When we talk about new locations, for us, new locations are not just new cities, but they are new locations within each city that we operate in also. Our broader thought process is that consumers in India typically like moving to a new location, which is within 2 to 4 kilometers of their existing home, so that they don't disrupt their existing life, including education for kids, office commute, social network, and so on. So we continue to want to have more presence in the 3 cities that we are operating, which is Mumbai, Pune, and Bangalore. In Bangalore, we started off with 2 launches last year. Both of them were very, very successfully received. We did about 1,200 crores of pre-sales from Bangalore from these 2 launches. Our pricing was much higher than what one would call other competitors in the market, because we also, in our opinion, offer much superior product, are spending more on our construction, and therefore the consumer is getting better value. We like the Bangalore market because jobs are being created, wealth is being created, and there is a desire to have higher quality housing. And that's the same trend we've seen both in Mumbai as well as in Pune. So we do think that the Indian consumer is becoming more aware of the fact that the house plays a very, very important role in the quality of life that one lives, particularly because our urban infrastructure is not the greatest. And therefore, there is a growing desire to buy from the most reputed players and buying in higher quality projects.
Correct. It's interesting you say that apart from new cities, you're also looking at new micro markets within the same city, right? We were having this conversation with Boman Irani of Rustomji a couple of days ago, and he said that there's a lot of interest in some of these newer micro markets, whether it's something like a Versova, Chembur, Bandra East, some markets that you've never really thought of being luxury home markets. You guys are also looking at places like Pallava and Upper Thane. Of course, you've been there. But what are the other new micro markets that you're looking to target within the MMR region? And where do you see potential?
Sonia, like I mentioned, we want to be present like a supermarket is every 2 to 4 kilometers. within every city that we operate in. Mumbai, of course, we are closer to that. And then in Pune and Bangalore, it will take us more time to reach that depth of being present every 2 to 4 kilometers, so that any consumer who wants to buy a home has a Lodha option which fits within his geographic preference. We don't think it's driven by having a luxury offering at every location. The offering has to be reasonably fit to the demands of the target audience in that location. Every product has to be high quality, and that's what really Lodha is known for and stands out for. But it can be across different price points.
Yeah, Abhishek, hi, good morning. For Palava and Upper Thane, I think you've given some big targets, right? Total sales, between big numbers, 175 to 200 billion kind of numbers. But these are very long-term targets, 30 years down the line. Could you kind of tell us why targets with such a long time frame?
Hi, Prashant. Good to speak to you again. Palava and Upper Thane are two large developments in the outskirts of Mumbai, are really a play for anybody who views India's long-term development. The reason we chose to look at the 30-year time frame, because the government has given, the Prime Minister has given a approximately 25-year time frame for India to become a developed nation. And we think that these two developments are a true blue-blooded play on India's development. Here we have land of about 600 million square feet of development potential. We have built the infrastructure. We have high quality of social infrastructure. The government's large infrastructure initiatives are all in that region. And we now have a situation where, in addition to mid-income and affordable housing, we are going to have premium housing come through in these locations. So while we, of course, have talked about what sales we will on an aggregate basis likely to generate over the next 3 decades, we are, of course, also breaking that down into what we expect to do, over the foreseeable near term and medium term. So that, of course, is all part of the overall thing. But we do need to take a view that, it's rarely in the aspect of development that you can get such long-term outlook and you can get such long-term visibility, which is one of the things which makes us stand apart as a company, is how we can have long-term visibility and long-term cash flows coming from these two very, very strategic locations.
And that is, and got that, well put, Abhishek, and that is $1 billion, is it? Just to confirm those numbers?
Yes, that's US dollar billion at current exchange rates of one US dollar being 83 Indian rupees.
Okay, got that. Abhishek, we're people who watch us usually look at whether stock ideas. Let me ask you, since I have you and you're the best mind to ask you the best property idea. Of course, without saying it's Lodha. I'm assuming that's what you will say. But which are the micro markets in and around Mumbai where you think one can expect? I mean, where there is a structural kind of tailwind. If you can identify one or two, I think it'll be helpful for viewers. Even from an investment point of view, which are the best placed micro markets around Mumbai?
I think, Prashant, that's the beauty of housing, is that housing will give you consistent compounding and, with very high tax efficiency for long durations of time without having the volatility which comes from some other asset classes. Today, even if you take conservative price growth of about 6%, when wage growth for the white-collar worker is more like 9-10%, and you take a rental yield which is about between 3 to 4%, you're getting housing without you needing to do anything special, giving you 10% total returns on an annualized basis, and it can be higher if price growth is higher. So you're talking about 10% returns, which are going to come through from any location that you buy housing. Just take care that it's a good location, good access, and you're buying from a reputed developer.
Which are those? I'm looking for value bets. Not, in the stock market parlance, we say what is overpriced and what's the undiscovered gem. So I'm looking for undiscovered gems, not completely undiscovered, but relatively. Give us one or two micro markets.
Prashant, I'm sorry, I won't have that view because, I think that the best value is not created by paying, whatever the lowest entry price is by paying fair value for good product and allowing the compounding to take place over a reasonable period of time.
Okay, all right. We'll press next time, Abhishek. We're out of time. That's the only reason we're stopping. Thank you very much for joining us and running us through what you make of the real estate picture and sounding bullish, and of course a little bit about the F525 guidance as well.